You're still watching World Insight with me, Tian Wei. This program is coming to you from Boao at the Annual Forum for Asia. Emerging economies are a unique phenomenon coming onto the world stage since the last financial crisis in 2008. They are efficient in forming mechanisms to work multilaterally both between and among themselves. The New Development Bank is such an entity. All the 5 emerging economies, BRICS members, have equal share in the bank and make shared decisions for themselves. Leslie Maasdorp, the Vice President and Chief Financial Officer of the New Development Bank, briefed me how this multilateral development bank sees the latest, such as China-U.S. trade negotiations and many other issues. Mr. Maasdorp, what a pleasure to see you in Beijing.
Thank you. Thanks for having me.
Well, China has been, since last year, announcing a series of financial sector openness policies. How is that likely to have an impact on the emerging economies that your organization is dealing with?
I think these are very significant announcements. I mean, as you know, the last 40 years of reform and opening up has been a very successful era in China's history, producing major economic benefits in terms of lifting hundreds of millions of people out of poverty, producing a manufacturing hub and creating this export-oriented global economy. But during this time, one of the real weaknesses of that period is that the financial sector and the capital markets remain substantially closed. So it's a bit of a contradiction, if you like, the economy globalizing, but one major segment of the economy being much more inward-looking. The next phase of what's called greater opening up, as you can see from the theme here at the China Development Forum, is about facilitating the liberalization of the capital markets. So that is going to be a major stimulus for the next phase of Chinese growth. Why do I say that? I say that because there's likely to be significant capital inflows over the next number of years to come. I'll give you one concrete example. The China interbank bond market, or the Chinese bond market, is substantially domestic, 98% domestic. As China now opens up access, and for example with Bond Connect, there'll be greater inflows of institutions buying bonds in the Chinese market going forward.
Yeah.
I guess I'm saying there is significant inflows for new investment coming into China.
Right.
The second point to make very quickly is that the foreign investment law that has just been passed is going to help facilitate that inflow.
Yeah.
Because there's greater certainty now, greater predictability about the environment that foreign investors come into. For example, the protection of intellectual property. Firms have always been concerned about whether there will be forced technology transfer to domestic companies. And in the trade dispute, as you know, between China and the U.S., this issue has been raised. Now there's a law that sets very clearly and gives the protection to foreign investors.
Right.
In sum, there's going to be major economic benefits that will flow from this period of greater opening up.
One point that you have just mentioned about the openness of the market, do you think many have got the message, though, that many have a sophisticated understanding of the series of measures of opening up in the financial sector since last year? I'm afraid there has been some deficit of information so far.
Yeah. Look, I think the important point here to make is that the reforms are not being introduced in a big bang fashion. One of the hallmarks and one of the key features of Chinese policy over the last 40 years, and continues to be the case, is a gradual incremental approach. So it is not going to be a series of measures that will be introduced in 1 or 2 years. There's going to be a multi-year strategy. The reason why it cannot be done overnight is because you can have lots of instability and volatility in capital flows, for example.
Right.
You can have major capital outflows if suddenly all capital controls are removed. So the policy measures and the impact of it is not fully understood yet, but I'm saying the direction of change is going to be positive, because there are many developed countries that have followed a similar path, where initially the markets remain closed as companies are ready for emerge out of the protectionist environment, ready to face global competition.
Right.
That is what is happening to China's financial sector now. You will find the big banks, the big asset managers, the big even the rating agencies.
They're very eager.
They are coming in and will establish without the now having to do local partnerships with joint ventures. Yeah.
Well, of course, we are talking about two tracks. One is, of course, China is further committed to reform and opening up.
Yeah.
On the other hand, it is also fighting three battles, which includes a battle against the financial risks. Yeah. Now, how should we understand the two sides of this argument? How that can be balanced well?
This is where smart regulation and having very effective prudential financial regulation in place. And that's also, as I said earlier on, you cannot just simply in one fine day wake up and
everything's resolved.
Remove all capital controls. You need to find the balance between trying to insulate the economy from the vulnerabilities and the risks that come with being fully integrated in global markets. So the key thing is to find the balance in the way that the regulatory environment is put in place.
And the other thing, of course, is about the competitiveness of the Chinese financial entities. If you look at the banks, they were already on their way a few years ago to become commercial banks, and they are now becoming some of the world's largest. Yeah. So if policies are being eased, not only for foreign investors, but also for these banks to do their own businesses globally, yeah, we do not know who is going to be more competitive, do we?
Right. That's exactly right.
That's an interesting thing, isn't it?
That is exactly right. Look, these banks will be, as they now will face domestic competition. Remember, they grew and expanded, all these large banks, Bank of China, ICBC, Agricultural Bank of China, all of them grew in an environment where they were effectively protected. They are state-owned banks, but they did not have competition from the foreign institutions. The next phase is going to be defined. They will also have to kind of relook at their business models, ensure that they become more efficient, make sure that they reduce non-performing loans in their books. A whole series of things will need to be done for them to effectively manage their risks.
You see the debate these days about geopolitics, about the world at a critical juncture. How will all these factors have an impact on the decision-making process and the eventual results of the decisions from your organization?
Thanks for that question, Tian, because it's very important to emphasize that multilateral development banks, by definition, have long-term, long-range lenses. So we do infrastructure finance. We provide loans to build bridges, ports, telecoms infrastructure, highways, and so on. These are long-term projects that typically 10, 12, 15 years. So we have the benefit of taking long-term views. Short-term cyclical dynamics naturally matter, but we are not driven by short-term profitability of what's happening in the next quarter in the economy. We factor those things, we take into account those variables, but we look at the world through sort of 15, 20-year lenses. Our projects are focused on ensuring we have developmental impact and that we are financially sustainable, yeah, rather than short-term profitability.
If you're talking about 15 to 20 years, Leslie, I have to ask you about this because there's likely to be some great change when it comes to sizes of the economies that, yeah, we're talking about today, yeah, and also maybe a share of responsibilities among different economies, yeah, in, yeah, 15 to 20 years.
Absolutely.
China-U.S. Just two examples. So how will that have an impact on your evolving policy, though with the mission clearly in mind?
So the new development bank right now comprises of 5 systemically important emerging markets.
Right.
The bank is going to over time also expand when we get the mandate from our board of governors and will become a bigger emerging markets institution. Emerging markets are still moving up the curve in terms of putting in place the necessary infrastructure in form of ports, rail, highways, roads, and so on. That will continue over the next 10, 15 years. So there's a demand, a continuous demand for what we do, which is infrastructure finance. And that is not going to go away anytime soon. So hopefully over the next 10, 15, 20 years, some of these economies will reach moderately prosperous status, if you like, and right, move towards a state where they are no longer borrowing members from the bank. That is really our ideal, that at some stage the BRICS countries will become like European countries now. They are non-borrowing members. They're part of the international system, but they contribute in other forms rather than borrow for building infrastructure.
We're looking forward to that day. It means
Absolutely.
those economies are developing fast. Talking about the real state of the economies, there have been recent debates about developing versus emerging economies, developed economies. What do they really mean? Now, there is a standard very clearly mapped out in OECD's standard, but we also see some emerging economies as a result of recent political changes aspire to be an economy of a different state. So to you, what does that mean, this noises or voices around?
As emerging markets, all of our countries aspirationally would like to become developed economies, so fully industrialized economies, right, where you have more mature societies, your infrastructure is fully developed, your education and health, your soft infrastructure is all very much in place, and through technological advances you're able to develop more your services sector, which is where most of these developed economies, the major contributors to growth. We are still a long way from, as emerging markets, achieving that status. We are well on a path towards that status. There are a number of developing countries that are no longer major borrowers from the global multilateral system. So at some stage we want our countries to graduate.
Right.
But we are not close to that stage yet because we still have significant gaps, infrastructure gaps, gaps in the quality of healthcare, quality of education, because it's not enough having the hard infrastructure, soft infrastructure, strong technology platforms, having high quality and making use of digital education, digital health technologies. So embracing the possibilities of what new technologies offer is going to be part of that process of becoming a more developed nation.
The New Development Bank has been very keen to bring in the green factor, both the green bond and also the projects that you've been working on. Tell me about what could be the latest, because now we see the world is moving so much to geopolitics that some of the most important concepts, including green, sometimes being ignored.
Green is a fundamental characteristic of the ingredients of what the New Development Bank is trying to build. I'll give you an example. The bank in every respect is trying to ensure that we contribute towards environmental sustainability. Firstly, it's in our legal documents, in our founding articles of agreement, where the bank's mandate is defined as sustainable development. So if you build a port, if you build a rail line, if you build a road, everything we have to ensure that we are reducing carbon emissions. We believe, and there are already very clear signs, that over time, capital markets will be willing to pay a premium for companies that, and for banks that are more sustainable. So we believe that our credit quality as a bank will be higher over time if our portfolio is mainly green. So the risks that we will be exposed to as a bank medium term will be lower than a bank with, let's say, a much more carbon intensive footprint.
That sounds a great idea, but Leslie, you know, at time when there are difficulties and challenges, people sometimes prioritize their task differently, particularly when you see the slowdown of the economies among the emerging economies. So do you think green will still be the priority? Will priority be re-streamlined, what we are talking?
That's a very interesting question, because what I sense now, and certainly from the public policy pronouncement, not just of Chinese policymakers, but also in some of the other countries, they see this opportunity of the slowdown to ensure that we leverage and make use of the new technologies that could enable growth in the future. I guess what I'm saying is this. Let's take the automobile market, right? There's a slowdown. If you just look at the numbers in China and many of our countries, because of the economic growth slowing down, fewer people are buying cars. However, the numbers of electric vehicles, the production of electric vehicles, China is already the biggest market in the world. In many of our countries, consumers are beginning, the demand and uptake is much higher. So green innovation is seen as a catalyst for the next growth phase. So as the economies are slowing down now, there's a search for where the next potential breakthrough could be in the green technologies.
Yeah.
Let's take battery storage, for example, which is at the heart of the electric vehicle market. That industry is going to lead to major structural transformation, and it could be an impetus and a stimulant for new economic growth. So because we're slowing down, green might lose its flavor of the month status, but at the same time, with these technological breakthroughs, it could in fact be the sort of secret ingredient that could produce that new sources of growth.
Over the past few years, there are so many debates, but at the same time, you see so many ideas of alternatives. Your new development bank is certainly one of those alternatives, accompanying or accommodating the earlier inventions, whether it's the World Bank or some of the others. But what's ahead? If you look at it, Leslie, the emerging economies, they individually have their own election cycle, and there are political changes within these economies already. Meanwhile, you also see the bigger environment, whether it's in their regions or globally. Things are becoming a bit different.
Yeah.
How will they be able to work together and also be able to see what their real consensus be for the future? I think that's an interesting question. As one that is running it, I'm sure you're thinking about it every day and discuss with them on a very frequent basis.
There are clearly shifts taking place in the global economy, politically and otherwise. As I said, we are very focused on ensuring that we keep our lenses firmly on the long term. By definition, the realignment that happens politically within regions, within regional blocks. A new regional bloc was formed in Latin America, for example, a few days ago, excluding some countries. So these dynamics we have to take into account. But fundamentally, we've got to be focused on what that medium-term agenda is. And as a bank, as I said, we have the luxury of having our entire activities is focused on that longer-term horizon.